Good morning. Welcome to Daily Currency Update from the Currency Desk. On Tuesday, that is the second trading day of the week, we saw a marginal fall in the value of Indian rupee versus the US dollar. And largely after the RBI policy, the Indian rupee has stabilized around 63 levels, and we expect a similar trend to go on further till we have any major developments on the global front. We had varied statements from the various FOMC members stating contrary views regarding whether or not QE would be tapered in the months ahead. We have a next meeting in October and one after that in December. So based on that, there are quite a few uncertainties created in the markets regarding whether or not Fed will undertake the tapering of the quantitative easing program in the near term. And based on this, we had a lot of risk-off sentiments developing in the markets, due to which we saw fall in the emerging markets and the various other developing market currencies and equities. The yen and dollar rallied on the basis of safe haven demand, and we had slight uncertainty and negative news developing from the US front as well, wherein the US Congress has to vote for a temporary funding bill before the deadline of Monday, and again we have the pressure of another debt ceiling limit breaching, which is hanging high over the US. Again, we had the euro fall in value against all the other major currency pairs, mainly on the basis of the weaker German data, the German confidence data, and again also because of the US news, which sparked some of risk-off sentiments in the markets. The USD INR 1 month forward NDF was trading at 63.40 levels, largely around the levels that the domestic futures are trading. So this was mainly an indication that today also we would see a flat opening and very narrow range bound trading in the Indian session. We have the technical levels for the day here. In all the currency pairs, the trend will be dominated by the US dollar versus the Indian rupee. Mainly we can expect some rally to be seen in the US dollar. So we would recommend a buy on dips at near about the support levels in all the currency pairs. Coming to events to watch for the day, we have the German GFA confidence data. We have the UK CBI realized sales data. Both these could have more of a negative impact if the data is not as per expectations than on the upside, because already we are seeing that the euro and the pound versus the US dollar have been rallying quite a bit. So there are more chances of a correction as compared to a rally based on these data. We have the US core durable goods data and the durable goods data coupled with the US new home sales data. So we could see a lot of movement in the markets tomorrow based on the home sales data, because this is one of the major factors that the Federal Reserve looks up to for making its policy decisions. Thank you.